welcome to Options Guide TV. My name is Brian Overby. I am the author of The Options Playbook and your host for about the next 25 minutes here on Options Guide TV. Go, Caterpillar, go. Solid earnings. The concerns about the construction of the data centers have been alleviated. And that was a bigger reason why Caterpillar had broken down. We ran up to an all time high right around the 1,000. Well, let me look at my chart here 1,160 or 1,062 level. That was fairly close to the all time high. Came all the way back down, and actually, the only thing that was scary about Caterpillar was it actually had broken through some support right around the $850 level. And the next stopping point that was the charts were really kind of highlighting was the 200-day moving average down around 750. But uh, they came out very good earnings. Everybody anticipated. They still blew earnings away, and then just said construction's happening. And I think it was, hindsight's always 2020, but it's a little bit of a no-brainer. Like they're you need this type of equipment to build these data centers, and the data centers are happening. It's not like they're going to just stop construction right now. That would be a horrible thing for the economy if they've stopped what they've started. And I just don't think that that's a viable happening is in the world of AI. There's other projects where it has happened. I mean, right now, Warner Brothers and Paramount, there's issues, and it's causing a lot of issues in California with the merger of those two companies. And heard and read a lot about that today. But that situation, Warner Brothers is actually getting beaten up. The stock price is because the deal is being threatened by the antitrust issues, mainly created by the AG in California. So stuff does happen, right? In this instance, I do think data centers are going to be built. Caterpillars can, as long as capex is still going up, they're still going to be a huge benefactor in that situation. Not to mention, it's just a good company. It's a very solid company overall. Now it's trading at a higher PE, but as far as a forward PE is concerned, Caterpillar is doing well based off of their last earnings announcement and their forecast going forward. So let's run to the Trader Pro software and let's take a peek at what has happened with the Caterpillar trade. So here is the chart, and let me add a couple of days. Let's go 1,500 and just look at the 200-day moving average. Because if you look at that, the stock has, ever since this was actually called a golden cross, when the 50-day crosses the 200 days, and the stock has never looked back from then. Strong move up. It doesn't, it's just a data point. I always think it's worth mentioning. It's obviously just showing weakness in the stock, but some of the times the chart could do that when you get a death cross to the downside. So you get that, comes back, makes a strong move to the upside, and then starts running away from the 200-day moving average. Well, then we got all the way up here, and for no, I don't remember a headline that would really drive Caterpillar down. And I'm frozen a little bit. I'm trying to zoom in right here. And that really caused this drop, except for the fact that there were concerns about data centers and all the complaints from a lot of the communities in the US. But with that all said, this was a breaking point to the downside. You could actually have made a bearish case right here with this candle that the next stopping point for Caterpillar was all the way down here around 740. But they had earnings in the middle, and that will obviously outweigh a chart in any factor, whatever they say during their earnings report. And this would be a small death cross because it's only the 20-day cross and the 50. I think it means a lot more when you're dealing with the 200-day moving average and shorter term averages versus that. But strong move up, solid move all the way through. Now we're trading at 893 right now. 893, we're almost 900. The trade that we did in Caterpillar, we bought the 850, sold the 880, which is about where it. Remember, we looked at the expected move, and we were fairly close to the expected move after earnings. Now, that expected move, and a lot of people, there is kind of a misunderstanding in that They say when you look at the expected move and you quote at everybody perceives that that is after earnings, the day after, but it is using options that expire on Friday. And so that means that's the expected move by Friday, either to the upside or to the downside. So it did it all in about one day, came very close to our 880 target, and now has gone through it. So now in this trade, we're in a really good position on the trade in that if we are, yesterday, we closed at 876 thereabouts, if my memory serves me correct, around 876, not quite 880. And now that we've gone through the middle strike of the open wing butterfly, there's not any reason to really close out that trade right now. We paid $6 for it, or you paid $5 and you did the 25-point wide one. We made the official paper trade a 30-point wide from 850 to 880. That's what I'm focusing on when I say 30 points wide. And right now that is trading for $14.13. Now, the biggest issue here, let's run to the options grid, is the time premium that's in the 880 option contract. Let's pull it up. You still have $13 of extrinsic value. Vol has, well, Vol is still solid in this front month, but expect Vol to start even drifting more down towards the 46 level. So is the at the money Vol really? Yeah, it's still high, around 65% on the, oh, 890 here. At the money Vol is 64% on this August 7th. So that's still elevated, even though we had the earnings report. So interesting how high it still is at. Almost makes you want to do another trade like this and see if vol comes off more. All right. Buy the 850, sell the 880. Oh, I executed this twice. 2 by 4 by 2. That's fine. So in this paper trade account, I executed this twice. But it's trading now for $15 net credit to the account. We put it on for 5. We've tripled on it. Stock is at 880, but there's no reason to get out of the trade. If we continue on up, I guess we could lose. If it goes above 895, the maximum we can make on the trade on expiration, if it's above 895, would be we're 30 points and then we're 15 points, so it would be $15. It would be right here, right where we're at. Because 30 points, this is our long spread. We're buying the 880, selling the 880. I'm sorry, we're buying the 850, selling the 880. That's 30 points wide. Then we're selling an additional 880 contract and then buying the 895. And this is our short spread that helps pay for the butterfly. And that short spread is 15 points wide. 30 minus 15 means that if we go beyond 895, the maximum this thing can trade for is going to be $15. We're at 890 now. If we drip back to the 880 level, this could trade for as much as $30 at expiration. So here's what you want if you're going to speculate on that. And if I did have wow, I don't know where that came from. I apologize. If I did have 2 contracts on, here's what I would do. I would consider taking this trade off, taking one of them off. I'd want to get at least $15. I don't want to there's no reason to not at least try to get $15 on this trade. And then I just let one run and see if we can get somewhere close to that 30 level, the maximum that it could trade for. If it drifts down a little bit as expiration approaches this August 7th, I would consider doing that. Now, if it blows through the 880 level, just get out. You don't want to, you have a really good gain. Just don't even think about it. Go in at the midpoint, work the order, see if you can get out somewhere close to that level. But what's hurting us here is that the vol isn't coming off. The fact that this implied volatility right here is still at 59 on the 890 level. That really hurts this. I'm sorry, the 56 on this short option contract really hurts us. If it got down to 46, this would probably pop up a couple of dollars just because of volatility crunch. Um, so there you go. Now there was a lot in that. So does anybody have any questions? Feel free to put them in the chat box. Want to make this an open outcry as possible. This is a very interesting trade on Caterpillar. Kind of, I look at Caterpillar as the exact opposite of what happened in Apple. And we didn't do an official bearish trade in Apple. It always scares me to get bearish in Apple, just in general, even when the fundamentals or the chart even says so. But if you look at Apple, they had an extremely good earnings report, but they came out and said that they couldn't get chips to make their phones. They got the demand, but they're having supply issues, which everybody's after all the chips. So it's kind of like, wow, that was really a surprise. Everybody wants, and with all the capex spend, chips are hard to get. So when Apple makes a big move up, you saw this huge move up, outperforming on all of the Meg 7, all of the hyperscalers, and it's mainly because they're not overdoing it, overextending, and the stock got punished for it. And a lot of times that'll happen. A real good run up in Apple, go into earnings, and they sell off. Well, Caterpillar was the exact opposite, polar opposite, in that really good run up going into earnings, it sold off, and now it's bouncing back. And this is actually a real interesting level here, right at 930. We came up and we touched it right here, right, almost like a head and shoulders pattern, right? We came back and we touched right here at the 930 level, and we're hanging out. Now we're at 891, back down to here. I still like this Caterpillar trade. All right, I think I want to add to this position. So right now, let's do this. I have the position on, and I did, for some reason, I executed two in this paper trading account as opposed to one. So we got 2x4x2. So 1x2x1 is a 1 unit butterfly. We're going to put this in and we're going to sell this good until canceled. And let's see if we can get more than the 15. At 895, the maximum you can make is 15. From there on up, all the way up to that expiration. So we're at 892. So we should actually be able to make a little bit more because the short spread hasn't really fully kicked in, which is our detriment. From 8, we have an obligation at 880 and we have a right at 895. So let's see if this trade will take at, let's go 1525, just see if it will execute. And send that down to the trading floor. Boom goes the dynamite. All right, we have a close order in on one of the contracts. Now, here's what I would do with the other contract is I would take the same thing, and I know the maximum that I can trade for is 30, but I will gladly take, let's take 22. And I would put the second one in at a net credit of 22, good until canceled, which is going to be this Friday, August 2nd. And I would leave that order in for the second one and see if we can steal another $7 out of this trade. We know we're going to get 15 at expiration. And, why was that rejected? Good till canceled, 850. Open. It says we got a total of 2 contracts in the portfolio. All right, well, we'll leave it there. I don't know why this order got rejected, but I don't need to figure that out right now. Net credit of 22 cents 50. Yeah, it should just be fine. All right, so here we go. Caterpillar. Let's add another trade on. Still like Caterpillar quite a bit. Um, let's. So my, do I want to do something that's going to create a net credit to the account with that vol, or do we want to look at another butterfly? Well, let's go back to the well. Let's do another butterfly. We're going to go out 9 days this time. I don't want to get that position convoluted just because we need to learn here on Options Guide TV. So we're at 890. Our target on the chart, if we got up, would be right around that 840 level. So in this instance, let's go 20 points wide. 840's right there at the top of that. Yeah, we're gonna be selling the 840 and buying the 920. 910. We can go 30. All right, here we go. Let's do the 910. We're gonna buy that one. It's 15 points. That's too far. Let's go to the 905, and then we'll go 20 points above that. Buy 25, sell 2, and then go 10 points and buy 1. 472. All right, so that our initial trade, we looked at one that was 500, and we looked at one that was 600. Now we're going to look at $4.42. And we'll make this an official paper trade. This isn't the one that I will highlight on in my X profile today, but this is a trade that we will send to the trading floor. Caterpillar's announced earnings. Vol remains relatively high. I don't want to deal with the August expiration, but that's the one that I'd rather be in. All right, let's go see where it is here. Let's do the 905. Buy 25, sell twice. I want to sell that vol in the short term is what I really want to do. We're still trading at 58 here. So we're going to buy this. When vols are high, butterflies are cheap. 905, 25, we're going to sell twice. Twice. And then that's 20, and then we're going to go 10. I'm going to buy that one once. So 339. So we can get this trade off for $339 expiring this Friday. We only got 2 days for it to run. What happens if we go down to the 900? Last adjustment, and then this is going to be the final trade. That's what happens when I go on tangents. 920, 920 here, and 930 here. Yeah, that's what we're going to do. We're going to keep it right there. All right. We're going to stay bullish in Caterpillar till Friday. Do a speculative trade. Trying to take advantage of the fact that the vol premium hasn't came out of the front term options. We still need some help from Caterpillar. We're going to ride the momentum to the upside. We're going to buy the 900 strike, sell 2 of the 920s, buy 1 of the 930s, creating a bullish open wing butterfly, hoping the stock goes at least above 900 by that August 7th expiration. We're going to ride that momentum, and we're going to send this down to the trading floor. We'll send it good for the day at the midpoint of $4. Boom, order has been sent. All right, so now on Thursday we do have a trade on in ConocoPhillips, and they are announcing Thursday before the open, August 6th before the open, which would be tomorrow before the open. And we're going to put on a trade in ConocoPhillips. So we have a position here. We have a long call spread from 121 to 124. With oil coming down, ConocoPhillips has uh, strong earnings are expected, but we've came off on that trade. It's at 286. We've got 2 days remaining, selling 54 vol. So I want to come in and sell something very short term. We're going to go 9 days out, and we're going to sell a put spread, hoping that the stock stays at this level and possibly recruits some payment to help pay for our longer call spread that we put on. Now, remember, this is a trade that we've nurtured. We put the trade on and we started as a diagonal where we bought a long call, sold a shorter term, a little bit more out of the money call against it. That option contract expired. So we came back in and we sold another 124 strike call to lower the cost basis even more on our long option contract. And now we have a long call spread in at a very limited price. But the stock has, like, this is a fairly big move for ConocoPhillips, down 2.5% on the day heading into their earnings report. I think we're going to get a little bit of stabilization. I don't want to go back and buy another long spread. So I want to sell some of the premium. We're going to go out to August 14th. We're going to sell we're going to sell the 114 strike put, and then go down and look at the 110 strike. 145, 4 points wide. We should be close to a third of the width of the spread. It's close. 145 divided by 4, we're looking at 0.36. So we're bringing in a little bit more than a third of the width of the spread. We're going out 9 days. We're 1 point out of the money right now on a day that we're already down $2.88. Vol is spiked. It's trading at 55% vol. Historical vol is about 34%. Hoping that we draw the line in the sand at 115. Let's go back and look at the chart. COP. And a golden cross here. 50-day moving average is at 15. Oh, and that looks like there's an area of support right there at 114. But we blew through it before. Yeah, we're going to send this for. This is going to be an official paper trade, and we're going to add to our ConocoPhillips position heading into the earnings report. Now, we have the risk. We're putting it up $1.45 on a 4 point wide spread. Fairly decent risk reward on a higher probability trade. Right? If the stock just stays where it's at or drifts higher, this trade is profitable. So don't even need the stock to move, and this trade would be profitable. It's a bull put spread. It's a put credit spread. And those are the different ways that you can say it. It's an alternative to a short put. We're just going to buy some protection, and always want to do that around earnings. And we're going to go out 9 days. We're going to bring in $1.45, and let's read this one back. So ConocoPhillips is trading at $115.23. So they're going to be announcing earnings tomorrow morning before the open. The stock is down $2.71 on the day. We're going to look at the August 14th expiration, which is 9 days away, and we're going to get bullish by selling a put spread. This would be a put credit spread. We're going to sell the 114 strike and at the same time buy the 110 strike. Right now the midpoint is $1.35. We're going to give a little bit. I guess we'll put it in right at the midpoint. It was 145 just a second ago. So let's send it down to the trading floor at 135, net credit to the account. Boom goes the dynamite. Order has been sent. So there's our ConocoPhillips trade right now, looking to sell the 114, buying the 110, heading into that earnings report tomorrow. looking to sell this butterfly? Oh, that's why, because this was a different order that was in here. Here's the order that we want to do. We want to duplicate. No, we should be able to execute. Oh, that we did all two. We did all of them here. Quantity open. No, I don't quite see why. I get it. It's doing a 2x4x2. That's what happened. All right, I'm gonna fix that. So we looked at our Caterpillar trade. Very happy with where Caterpillar is at. We're going to try to take some money off the table. If the stock does come back down, we're going to kind of fish around, see if we can get somewhere close to the maximum on this trade. We're in a very good spot with expiration nearing. Vol has stayed high, so we went out and did another trade using that same expiration date going up and above the 900 level, which we've already seen Caterpillar touch here in the short term. And this one's going to be a little bit even more speculative because we got a shorter time frame for it to reach that strike. So we'll take some of the profits, go back and double down and see if we can get the stock to go back up above 900 before this Friday. And those are going to be the trades. Lastly was our ConocoPhillips trade, COP, selling a short put spread going out to the August 14th expiration, bringing in a net credit of $1.35 to the account. And that is it. That's it for this edition of Options Guide TV. I don't see any questions. If you do, please feel free to put them in the chat box. Always happy to address them. We will be back this Friday for the next Fundamental Friday, where we talk a little bit more about the basics of options. And then we'll come back on Monday and we'll see how our ConocoPhillips trade did. Thanks for stopping in, and we'll see you this Friday, hopefully, for the next edition of Fundamental Friday on Options Guide TV.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.